Yes, people, a very, very happy morning to all of you. Thank you so much. So, guys, we are starting with a brand new web series which is called as Company Accounts. We have just completed one web series in the last class, which was Partnership Web Series. So, guys, in this web series, in total, we have three seasons. How many seasons? Three seasons. First season, what are we going to see? What are we going to learn? We are going to learn accounting for share capital. Accounting for share capital. This season will comprise of roughly around 20 to 22 episodes. Oh my god, they're killing it. Episodes. Classes na varamatingla. If I say classes, you guys will not come. No. This episodes. We have how many episodes? 20 to 22 episodes. Wonderful. Then we have accounting for issue of debenture, roughly around 6 to 10 episodes. Then accounting for redemption of debenture. Fortunately or unfortunately, the third season is deleted by censor board. Oh my god. Who is the censor board here? CBSE. So since COVID 2020, one of my favorite chapter got deleted. Accounting for redemption of debenture. Oh, CBSE people very happy. Foundation people, oh, Angel, wow, sir. My dear Angel, you're not in 12th standard. You're in foundation. In foundation, this chapter is there. Oh my God. So all those who are regretting that we are not doing redemption of debenture in 12th, please don't worry. If at all you're doing CA, in CA foundation, we will deal with accounting for redemption of debenture. But for 12th CBSE people, what do we have in your syllabus as of now? Only accounting for share capital and then accounting for issue of debentures. Got it? Not got it? Super. And recording it. Why should I? Well, let me go in a flow. No, he said something. I wanted to comment, but recorded class, first class, I'll put on YouTube. So why should I comment? So I was like, I'll be very silent. I'll be today very good boy. Amul baby. Now, guys, partnership series from the board examination perspective carries a weightage of 36 marks. All of you know that. Now that we're doing volume 2 of T.S. Grewal, which is accounting for companies, from the board examination perspective, this is carrying a weightage of 24 marks. These two chapters, just these two chapters put together, 24 marks. Okay, not okay. Fantastic. For CA foundation people, from accounting for companies, you can expect a question of 10 to 20 marks, a minimum of 10 to maximum of 20 marks. But for you, apart from these two chapters, you have a couple of more chapters, such as accounting for redemption of debenture, bonus issue, rights issue, redemption of preference share. All this will be dealt with in CA foundation level. So people, 12 CBC people, 24 marks of weightage from this chapter. I mean, this chapter in the sense from company accounts on the whole. Got it? Not got it? Super. Now, accounting for share capital is the first topic that we're going to discuss today, people. So I'm just reading what is given in your textbook. Then I'll start the explanation. It says that meaning and definition of company. Can someone tell me what is the difference between meaning and definition? Are they both same or are they both different? 100% different. What is the difference? Meaning, meaning you can write in your own language. Definition means what? Somebody who has defined it, you have to quote his definition as it is. So meaning means I can give an explanation about the company in my own language as long as that is making sense. Definition means somebody has already given a meaning of it. I'm just going to quote it as it is. So for example, section 2, subsection 20 of Companies Act says the meaning of company. This you cannot write in your own language. You cannot alter even a single letter of this line. When you quote somebody's meaning as it is, that is called as definition. Then what is meaning? Meaning is your way of explaining something. Definition means what? Somebody who's explained the meaning of it, you are quoting as it is without altering a single letter. That is called as definition. Got it? Not got it? Energy, energy fast. Very good. Now, a company or a joint stock company. I'm just reading, then I'll explain. is an entity registered under Companies Act 2013 or under any previous companies incorporated to do business. It is a legal person not having a physical existence and has a separate legal entity. That is, it is an artificial person separate from its members, shareholders. Whew. This one paragraph, if you allow me, I can take 2 hours of class just on this. So much of information is there in this paragraph. Sir, are you serious? Will you take 2 hours for this one paragraph? No, I'm not that brutal. I'm a nice gentleman. I will take class how much it excites you, how much you like it. Above and beyond that, everything else chop off. Got it, not got it. Means whatever is applicable at your level, 12th standard level, foundation level, same level. Both 12th and foundation, same level. Whatever is applicable for your level, everything I'll take. Nothing I'll compromise. That is my promise. And one thing I'll promise is the amount of knowledge what you'll gather in my classes, it's my challenge that you will not get the knowledge elsewhere. Open challenge. So with that, can we proceed forward? Fantastic. A company is also called as joint stock company. It is called as joint stock company. To be very precise, company's got a very wider term. In that term, a smaller version of it is called as joint stock company. Only stock is nothing but share of a company. What is share? What is share? We'll discuss. But I'm just telling you, share is nothing but capital of the company. Capital of the company. Prida. So a capital which is jointly held by multiple owners, it is called as joint stock company. Got it, not got it. A company at times will be referred as joint stock company, which means what? The capital of the organization, which is jointly held by multiple owners, is called as joint stock. Stock means capital. Stock means share. Share means capital. Got it, not got it. Super. A company, also called as joint stock company, is an entity. It is an entity. What is meaning of entity? We discussed in 11th standard. What is the meaning of entity? Enterprise has been discussed in 11th standard. What is entity? Enterprise? It is a form or a body in which the business operates. It's a way of referring a business. You are called as human being. You are called as boy. You are called as girl. It is way of referring. Like that, a business is referred by the name entity. Entity ka another name is enterprise. So a company is an entity or an enterprise registered under Companies Act 2013 or under any previous Companies Act. Now, have all of you completed partnership in your school? Everybody know, at least if you have not completed also, but at least what you know what is partnership? At least first chapter is completed. No, fundamentals is over for everyone. Hell no. Okay. In partnership, we spoke about two things. One is agreement. Second is registration. Very good. One we spoke about agreement. One we spoke about registration. Can somebody tell me, in the context of partnership, what is agreement? What is agreement? You're telling a legal document, which means as per you, agreement should always be in writing. So what is meant by agreement? Agreement is basically the terms and conditions agreed between the partners. You contribute so much capital, I will contribute so much capital. You will take so much profit, I will take so much profit. In this business, you do so much work, I will do so much work. You make the payment, I'll receive the money. Like that, all the terms and conditions are agreed between the partners. That is called as agreement. Agreement. Got it, not got it. Having an agreement in partnership business, is it optional or compulsory? Online people, having an agreement in the partnership business is optional or compulsory? It is 100% compulsory. If you do not have agreement, what will happen? If you don't have the agreement, it will be a continuous big problem between the partners. And every single person, instead of doing the business, will sit in the court of laws fighting cases. Hence, it is important that you should have agreement. Now, the question is, sir, should the agreement be in writing or should it be in oral? It can be in anything. It is not a compulsory thing to have the agreement in writing. You have an option. Whether you want the agreement to be in writing, it can be in writing or it can be in oral. Oral means again two ways. Orally, if you just agree and leave it, that is one oral one. Something is like you put a voice recording of it. So that is also agreement agreed orally in voice, but still it is documented somewhere. It is still documented somewhere. So in WhatsApp, if you have a oral documentation of the terms and conditions, that is called as oral agreement. That is called as oral agreement. So what is written agreement? The agreement which is put down in the writing, the agreement which is put down in the writing on the piece of paper, it is called as writing. Partnership agreement in writing. Technically, we give a name to this called as partnership deed. A partnership deed is a document which is put in writing. Terms and conditions put in writing is called as partnership deed. Any problem? So this partnership deed can be put in writing in two ways. One, it can be on a plain A4 sheet. Second, it can be on a stamp paper. Which is preferred? Having on a stamp paper is preferred. Having on a stamp paper is preferred. So if you see, most of the partnership agreement will be on the stamp paper. How the stamp paper looks like, I showed it in the partnership class. Yes or no? Yes. But yes, of course, few people who are not much aware about all this, they also take the printout in the A4 sheet. Got it? Not got it? Okay. Now, what is meant by registration? Boss, this is partnership. Registering a company. So registration is process where you register your partnership deed with the local authorities, local government. So if I'm operating in Tamil Nadu, I have to get the document registered with the Tamil Nadu government. Got it? Not got it? If anybody is doing business in Andhra Pradesh, so in AP, they have to register the document with their local government. If anybody is doing business in Delhi, they have to register the document with the Delhi government. Got it? Not got it? Right. Some people confuse that. If I have an agreement on the stamp paper, that itself is registration. No. What is meant by registration? First thing, you have to, when you do a registration, you have to have the document with the stamp paper, no doubt. But stamp paper itself, if you take a printout on stamp paper, that itself is registration if you think you're wrong. What is meant by registration? You have to take the stamp paper. You have to take this partnership deed, which is printed on the stamp paper, signed by all the partners. You have to take it to the registrar office. Which office? Registrar office, which will be there in every city. You have to go to their office. You have to get a seal of government on that partnership deed. That is on the stamp paper. You have to get a seal of it. Purida. Plus, you have to pay a stamp duty fee. You have to pay a stamp duty fee to the government. Got it? Not got it? So if you complete the registration process, then we say your partnership firm is registered with the local authority. Got it? Not got it? So tomorrow, if any dispute happens, if any proceeding is going in court, then having the partnership deed registered will give you a lot of advantages than not having it registered. Got it? Not got it? I don't know if you have seen in recent scenarios, recent days, even the rental agreement, that is our Tamil Nadu government said that even the rental agreement also should be registered with the registrar. If the tenant and the owner wants to take the benefit, right? If they want to safeguard themselves from some risk, it is always better to put the terms and conditions in writing and get the document registered with the registrar. That is a local government body. Got it? Not got it? You can go check in the Google somewhere. Recently, this is a hot topic which is going in last couple of months. Now, so are you clear with the registration process? What is registration? It's basically you put the partnership deed on a stamp paper. All the partners sign on it. You take that document to the registrar office. They'll put the seal on it and you have to pay a requisite fee on that. This entire process is called as registration. Got it? Not got it? Which under partnership business is optional. It is not a compulsory thing. It is optional. Got it? Not got it? Nah. But if you want to start a company, registration is not an option. It is a compulsory thing. Means company ka birth will not happen without registration process. To be very precise, the company is born only after registration work is completed. Got it? Not got it? So a company is an entity which is registered. You have to complete the registration. Who is telling you to register? Companies Act 2013. Who is telling? Companies Act 2013. So my question goes to all of you. What is meant by Companies Act? What is meant by Act? It's a rule book. So if you have a company, there are certain rules and regulations that has been laid down in the Act. Act is nothing but law book. It's a law book. You have to compulsory follow all the rules and regulations that is laid down in this law book. This law book ka name is Companies Act 2013. So in this act, in this rule, what law has been laid down? All the law related to companies is being laid down. Got it? Not got it? So if I want to know something about partnership, can I go and see Companies Act? No. This Companies Act is exclusively for which type of entities? Company form of entities. Got it? Not got it? Okay. Act is nothing but law, nothing but rule book. This rule book is for what? Companies. Either law, okay, sir. All this is fine. What is meant by 2013? This act was passed in the year, was made applicable in the year 2013. Got it? Not got it? Now we are in which financial year? 2026. How many years has gone by? 13 years gone by since this Companies Act 2013 is implemented. Sir, are you trying to say that only those companies which is registered after this act are companies? No. Companies ka concept, do you think it is applicable only from 2013 onwards? No. Companies concept was existing for more than 2 decades. Sorry, more than 2 centuries, not decades, 2 centuries. You take some of the companies were there even before independence also. Even before we got independence, no? Even before that, the companies were existing. Got it, not got it? So prior to Companies Act 2013, was there any other act? Yes, that was called as Companies Act 1956. Prior to this, was any Companies Act was there? Yes. But the latest act which got scrapped was Companies Act 1956. Reliance Industries Limited, Mukesh Ambani's company, is registered under which Companies Act? 1956 Companies Act. Got it, not got it? Now he's going to come out with a new IPO. Jio ka new company is going to get launched. That is going to be registered under Companies Act 2013. That is company. What about Reliance Industries, which is into existence for more than 6 decades? Reliance Industries is there for last 60, 70, 80 years. Vechkonga. Apo 2013 was just 13 years ago, no? What about those companies which got incorporated 60 years ago? Where was they incorporated? Under the previous act. So before 2013, what is the previous act? 1956 Act. So this point is trying to say that all those entities, whether they are incorporated or registered under 1956 Act or 2013 Act or prior to 1956 Act, every company is a company. You cannot say that, no, only those companies which got created out of 2013 law, they are companies. Other people are all fool. Solomnima, can we say like that? Tell no. No. Can we say like that? No. So any entity, if they're registered as a company, either under 2013 Act or under any previous act, even they are called as company. Got it, not got it? So all the company which is registered under 1956 Act, they will follow the rules which is mentioned in 2013 Act. Got it, not got it? So all old companies also have to follow the new rules mentioned in 2013. Got it, not got it? Super. A company is an entity registered under either 2013 Act or previous act. Why is the company incorporated? To do business. Why? To do business. Got it, not got it? Hell no. Okay. It is a legal person not having physical existence and has a separate legal entity. That is, it is an artificial person separate from its members. Okay, before that, what is company? What is company? Now listen to very carefully. In India, if you want to do business, your business needs to have a form or a body in which it can operate the business. Got it, not got it? If I have to come and take class here, my soul needs Pratik sir's body to take class. Can my Atma come and take class directly here? Can you do any activities? The activity what you're doing, no, it is done by your soul. Can soul perform its activity without the body? No. Like how a soul wants to perform some activity, it needs a form or a body to operate. In the same manner, the business is also a soul. To operate, it needs a form or a body to operate. To operate, it needs a form or a body. So like that, in India, you are allowed to have different forms of doing business. You can do the business in multiple bodies. One is sole proprietorship form of doing business. Second is partnership form of doing business. Third is LLP. Fourth is company. These are the 4 prominent things. What is a sole proprietorship business? Tell me, people. Very good. This one single person gets an idea of doing the business. He's one single person who gets the idea of doing the business. To do the business, paisa is required, funds is required. He's that one person who goes around everywhere. He puts all the efforts to arrange for the funds to start the business, to do the business, to grow the business. Third, he alone manages and leads all department. So in my business, there are multiple departments. We have sales department, we have pre-sales department, we have HR department, we have accounting department, we have operation department. In all the departments, staff will be there. But for all the department, who is one decision maker? I am the sole decision maker. Got it, not got it. I am the person who is responsible for making all the important decisions. At the end, whatever benefits I get by running this business, who will reap the entire benefit? Who will enjoy the entire profit? One single person. So this is basically a one-man show. Got it, not got it. Tell no. In this form of doing business, there are a lot of inherent limitations. About this, we have discussed in depth in the partnership topic. So tell me, people, one of the biggest difficulty in the sole proprietorship business is what? Donkey fella. In partnership also unlimited liability is there. We have a biggest constraint here is capital constraint. One single person, how much will I invest in the business, boss? I have an idea to develop an apartment. How much apartment? 300 apartment. You imagine, you know, can you calculate and tell me to manufacture, sorry, not manufacture, to construct 300 apartments, how much funds is required? 300 apartments. Even average, if you put 50 lakh rupees construction cost, 50 lakh multiplied by 300 apartments, how much is the construction cost? $150 crores. How much it is? 150 crores only for construction. To buy the land separate. Is it possible for one human being to contribute 150 crores unless and until you are Ambani, Adani? Can you put 150 crores from your pocket? No. So we have a biggest constraint is capital constraint. Second constraint is management constraint. Imagine Fortune's Fun Learning Academy or CA.Prathik Academy. I want to have one branch in every city of the country. In India, in every city, I want one branch. Is it humanly possible for one person, Pratik sir, to sit and manage all the branches? Not possible. So next constraint is management constraint. To overcome such constraint, what did people form? People formed partnership business. What is partnership business? Where two or more people come together to carry on their business. So two or more people will contribute capital. Two or more people will manage the business. So in comparison to sole proprietorship business, partnership business is a safer option to scale your business, to grow your business. Got it, not got it. But in the partnership business also, there were certain inherent limitations. So people were not comfortable in the partnership business. What was that? Very good. Unlimited liability in the partnership business was bothering the partners. Means what? If the assets of the firm is not sufficient to pay the liabilities of the firm, then such liability holders attacked your private assets. This we studied in depth in the dissolution topic. In the dissolution topic, we studied this in depth. Yes or no? So to overcome this limitation of unlimited liability, people started forming limited liability partnership. So this is also partnership, but the liability under this is limited. Got it, not got it. Super. This is one constraint in the partnership business. What is another constraint in the partnership business? What was another constraint in partnership business? Minimum people in partnership business are 2. Minimum partners 2. Maximum 50 or 100? 50. Which means if I'm doing a business where I want 75 owners, 75 partners, can I form partnership business? No. Got it, not got it. So in the partnership business, the minimum number of partners that you can have is 2. Maximum is 50. Got it, not got it. Now, what is that 100 ka limit? Somewhere we stated 100 is one limit. What is that? In Companies Act, the power was given to central government. In the Companies Act, mind you, in Companies Act, the power was given to central government that they can fix the maximum limit as 100. Got it, not got it. Out of that, the central government at present has fixed what is the maximum limit? 50. If central government wants to increase the 50 limit to 60, is it possible? Yes. Can they increase to 70? Yes. Can they increase to 90? Yes. Can they increase to 100? Yes. Can they increase to 101? No. So central government is being capped by law. So company law is told that maximum partners that you can have is 100. Of that, central government today they said, no, we'll have only 50. Got it, not got it. So if I want to start a company or a business where I need 100 owners, can I form partnership business? No. Hence people looked up for another form of doing business, which was company. Companies of three types. One is one-person company, I'll discuss today. Second is private limited company. Third is public limited company. Reliance Industries Limited is a public company. I'll tell you, in that, the maximum number of people, maximum owners in that business is unlimited. Oh my God. There is no upper ceiling limit in a public limited company. If you want to have 10 lakh owners, you can have. If you want to have 10 crore owners, enjoy. So this gave a lot of flexibility to the entrepreneurs, to the entity. Hence, the birth of the company, the concept of company was introduced. Got it, not got it. Tell now. Online people, tell now. Got it, not got it. Super. Now, so are we clear how this concept of company came into picture? Company ka concept is clear? Okay. What is joint stock company? Clear? Okay. What is Companies Act 2013 and previous act? That is clear? Okay. Now the next point is, they're telling that it is a legal person, not having physical existence, has a separate legal entity. That is an artificial person separate from its members and shareholders. Oh my God. Killing this is. Now, whatever points we have discussed in this paragraph, it's all put in beautiful manner in the next page, which is called as characteristics or features of a company. The first process is incorporation. Incorporation. Sir, previous part you didn't explain. Arey, donkey fellow, don't worry. What is separate legal entity, artificial person? Everything is getting covered in the next page. So can I go properly in order? Okay. What is meant by incorporation? The process of registering the company. The process of registering the company with the government is called as incorporation. So there are some incorporation procedure which I'll discuss probably in the next class or next to next class. What is incorporation? A company is an artificial person set up by the process of law as prescribed in the Companies Act 2013. In short, what is incorporation? The process of getting the company registered is called as incorporation. Incorporation is nothing but a process of registering the company with the government is called as incorporation. Got it, not got it. In the Vengayam and the artificial person process of law. We'll keep it very simple. What is incorporation? The process to set up the company. There's a list of process that has been laid down, upon following which your company will be registered with the government. That is called as incorporation. Got it, not got it. So we see basically on the page number 8.6, they have given the incorporation ka process. There are 4 stages of incorporation. If you complete all this, you can say your company is incorporated. Got it? So this I'll discuss in the upcoming classes. In depth we'll discuss. Okay. Now next is separate legal entity and artificial person. A company is a legal entity separate from its shareholders. In the eyes of law, it is an artificial person. It can own property, enter into contract, conduct business, sue or be sued for debt and actions. Nonsense. Nothing understood. No problem. Leave it. We will discuss separately. Have you studied 11th properly? Okay. In that one chapter was there, rules of debit credit. Okay. In that, I taught you 2 rules of debit credit. One is called as golden rule. Second is called as modern rule. In the golden rule, they said that all the accounts can be classified under 3 categories. Personal account, real account, nominal account. Wow, very good. You remember? Personal, real, nominal. In personal, there are 3 subclassification. A personal account can be classified as natural personal account. Natural personal account. Natural personal account. Artificial personal account. And then representative personal account. This is not important for my discussion. Let me focus on natural personal account and artificial personal account. What is meant by natural personal account? Who is a natural person? Created by God only, you can say at this stage. Created by God. Okay, then, human being. Example is human being. What is artificial person? Artificial person also is person. But this is not created by God. This is created by law. This is created by law. So my question is, God created human being, understandable. We have come to this planet to live our life, understandable. Why did law create another person called as artificial person? Innade, commerce people, you'll create artificial person. Science people, you'll create artificial intelligence. Oh, everybody wants to create something artificially. Yeah. Why is law creating artificial person? I want to know today.
To make it separate from the owners, to make the company separate from the owners.
அப்ப பிரிக்கிற வேலை உண்டு.
So that the personal assets.
Oh, like that. Wrong. To facilitate. Hey, donkey fella, I'm not talking about artificial intelligence, robots. I'm talking about artificial person, company I'm talking about. Why is company coming? So that human efforts are reduced. It helps. How will the company help to lead a happy life for human being? You tell me logic now. पैसे कौन कमाएगा? तू कमाएगा. कंपनी क्या करेगा? ऐसे उड़ा के देगा पैसे देखो. ना कुछ भी. Something is blabbering. Why do you want a separate person? Everybody is telling, sir, only if they are artificial person will treat us separate. Why do you want separate? So you can segregate the asset of the owner separately and company separately. Okay, that's not the main point. Something else. Why do we have the concept of artificial person? Okay. அதெல்லாம் அதே லைன்மா. What is there in textbook? You're copy pasting as it is. Chalo, no problem. I'll give you one scenario. You tell me. Okay, now listen. Shh. Guys, I want to tell something to all of you. I'll take this as an opportunity to make the announcement. Listen. So guys, this is a proposal to all of you. Now that you're seeing that we're doing quite well in this academy. So there's one proposal that has come. There's one particular investor who's willing to offer 1 acre land to us. But he's telling that he'll provide the land to us free of cost. No, not free of cost. At a subsidized rate. He'll provide the land for subsidized rate. Means if the land worth is 50 crore, he's going to give that land to us for 20 crore. Right? 20 crore. And we have to construct building on that and run the academy. Right? And this is not to be restricted only to commerce. We can also start the coaching for NEET, JEE. All of you know how much paisa is there in that. Excellent business. CA coaching fees, not that much. NEET, JEE, super coaching fee. So now, we are guaranteeing that anybody who's investing in our business, assured we are going to give them 10 to 20% returns. So if you're investing 1 crore, 1 crore ka 20% is how much? 20 lakhs assured it, guaranteed. Who gives guarantee? You go invest in mutual fund, will you get guarantee? You go invest in bank, 6% FD rate. I am giving guarantee 20%. How many of you or your parents are interested to join me? You can join. Me. Now the project worth is how much, 20 crore rupees we need for land, plus another 80 crore rupees we need for construction of the building, running the operations. Because in the first year of business, profit will not come. You have to do big heavy advertisement. I thought of signing up Virat Kohli for brand ambassador and all. So expenses are very high, boss. 80 crore rupees. Okay, wow. How much is the project worth? 100 crore. Right? Got it? Now, the deal is that this land is there. No, land. I will not register in the name of company. I will register in my personal name. S.Prathik Jain. Got it, not got it. Land, I will register in my personal name. Money I'll take from you. Money I'll take from you. But I will register this land in my name. Okay, this is the condition. There's 80 crore rupees. So how much will I invest from my pocket? I will invest around 10 lakhs from my pocket. Rest of money, all you have to invest. Out of 100 crore, how much will I invest from my pocket? 10 lakhs I'll invest from my pocket. Okay. You bring 100 people, nahi. You bring 1,000 people also. I'll make them the owners of the company. In companies, you can have 1,000 owners. Yes or no? So like that, you'll have you will be there. Your friends will be there. So we'll make all of them investors. Let them all put money. You put 1 lakh, I'll give 1 lakh ka ownership. You put 1 crore, I'll give 1 crore ka ownership. But the term and condition is that this 20 crore ka land is there. No. You will pay money from the company only. That is, you'll give capital to the company. Company will pay the money. But in the agreement, in the sale agreement, in the land ka registration agreement, my name will be there. Whose name? My personal name will be there. Got it, not got it. Why? Because company is not a person. No. For to register a land with a registrar office, somebody has to come and sign. Who has to come and sign? Buyer, seller has to come and sign. I'm the buyer. Company is the buyer. Can company come and sign? Not possible. So I'm not putting company's name. Like that, I'm telling all of you, and I'm registering the land in my name. Any problem? Who are you people? You people are idiots who don't know what is company law. You don't know what is Companies Act. You don't know what is artificial person. You don't know anything. So I'm telling, I'll buy the land in my name. You are asking, so why are you buying land in your name? I'm telling you, I'm buying land in my name because in the sale agreement of the land, the person who's buying, no, their name should be there. They have to sign. Since company cannot come and sign, I'm putting in my name. Like that, I'm telling you, I'm cheating you. Purida. Now what happened is, all of you agreed. Because you don't know anything. No, you guys are idiots. You don't know anything. So you also give 100 crore rupees to me. In this 100 crore, my contribution how much? 10 lakh. Land purchased today. 1 year went, 2 year went, construction did not happen. This 80 crore money is there in the bank account as it is. You're also happy. Oh, 80 crore, our money is there. And you're also happy that the 20 crore rupees what we paid to buy the land, that also land is there with Pratik sir. Okay, very good, very good. 2 years went, 3 years went. I don't have the intention to build the building, to run the academy. What a calculation I've made. This 20 crore ka land is my name. After 3 years, the value of this land is 80 crore. So I'm thinking, why should I struggle to build a building? Then I have to take classes. So much of pain, no? This 80 crore, if I get in my bank account by selling the land, if I put this in fixed deposit, I'll get 6%. Tell me how much is the interest per annum? 80 crore into 6%. So 6%. 4.8 sir is the interest I will earn. Where I'm sitting there without doing any work, I'm getting 4.8 crores per annum. So what I did is, without your knowledge, silently, this 20 crore worth of land, I sold it. Sir, how can you sell, sir? Arey donkey fellow, in the agreement, whose name is there? My name is there. As per that, I am the owner. Do I need to take permission from you? No. But who paid money for that? You. Whose name is there? My name. Who's the official buyer? I'm the official buyer. Who has the power to sell? The person whose name is mentioned in the agreement, he has the power to sell. I sold it for 80 crores and I ran away. என்ன பண்ண முடியும் உன்னால? What can you do? Tell me no. Can you do anything? In this entire process, what mistake did you make? Allowing Pratik sir to register the company in his personal name was the mistake that you committed. Got it, not got it. This happened in the past. When the so-called artificial person ka status was not there, no, this happened truly in the past. To overcome this problem only, law said that in future, if company is sponsoring the money for buying any asset, then that asset should be registered in the name of company. But the problem is, to sign the agreement, person should be there. No. So they said that no problem. company will now be called as artificial person. Law said that even not a varis, he's my artificial person. So the director of the company on behalf of the artificial person can sign. Like that, they made modification in law. Why have we given the entities the status of being called as artificial person? So that they can buy the property, they can sell the property in their own name. So when any business wants to enter into contract, no, now they can enter into contract in the name of company. So if I sign any agreement with any colleges, it's in the agreement, it is not between Pratik sir and college. It is between CA.Prathik Academy and college. It is between Fortune's Fund Learning Academy versus college. So all the contracts are signed in the name of business, in the name of company. Got it, not got it. Why? Because company is an artificial person who can enter into contract. Got it, not got it. If I want to file a case on somebody, I as the company, if I want to file a case on somebody, in the name of company, I'll file the case. CA.Prathik Academy has filed a case on XYZ person. Got it, not got it. If somebody wants to file a case on CA.Prathik Academy, they can file the case on the company. Got it, not got it. Not on a specific person, the company on the whole. Hence, it was very important that the company is being called as a artificial person. So law gave the stature that a company be called as artificial person. Got it, not got it. Masala is good masala, not good masala. Now, Supreet, the doubt. What is this doubt? Is, sir, whatever story you said now, is it true or chumma for story you said? No, he's asking whether the proposal is true or not. He kept his check ready. You see, no, sir, I'm willing to give 20 lakh rupees right now. So whatever I said now is a pure lie. There is no land. There is no building proposal. Which investor donkey fellow will come and give me land at discount rate? So all this I just created to make you understand the importance of the company being called as an artificial person. Got it, not got it. Tell no. In the eyes of law, a company is an artificial person created by the law. So that, why it is artificial person? So that it can own the property in its name. That is, it can buy the property and sell the property in its name. It can sign a contract with somebody. It can do business. It can sue. Sue means what? I can file a case on somebody, or somebody can file a case on me. For what? For debts or any other actions. Debt means what? I took a loan of 10 lakh rupees. I means company. Company took a loan of 10 lakh rupees. Company is not paying. So banker will file a case on company. Debt actions. Other action means what? If there is any other action through which you have caused trouble to the other person, that person will file a case on you. Got it, not got it. If any employee is not being paid salary, then the employee can file a case on the company. Clear or not clear? Okay. What is separate legal entity? A company is a legal entity separate from its shareholders. This is not a new point, people. This we already studied in 11th standard. Our accounting rules itself said that when we do accounting, we do from the business point of view, not from owner's point of view. So we said that there's a concept called as business entity concept. Accounting entity concept, which said that accounting is to be done from whose point of view? Business point of view, not from owner point of view. Owner or expenditure, can I record in the business? No. Hence, for that, the segregation between the entities was important. The same point here has been again told by company law. Company law says that whenever the company does accounting, it will do the accounting from company point of view. Whenever the company is complying with any legal compliances, it will do from company's point of view. You will never do anything from shareholder's point of view. What is shareholder? Owner of the company is called as shareholder. About that I'll discuss in some time. Okay, not okay. Tell no. Okay. So out of the points mentioned here, 8 points, first 3 I've completed. In this, if you have any doubts, please let me know, or else I'll continue. Can I continue? Okay. In the first para, it says that it is a legal person. Legal person means what? Artificial person means a person created by law is called as legal person. Does a company have any physical existence? You and I have a physical existence. If I want to sign a contract, I physically will sign it. Like that company, does it have any form or a body? Physically, can you touch? No. So the company does not have any physical existence. It exists only on a piece of paper. And the company's got a separate legal entity. It's an artificial person separate from its owners. Got it, not got it. The first paragraph completed. If this is clear, I'll go to the second paragraph. Guys, you have to bear with me for 3 classes. The first initial 3 classes is going to be full theory. And from 12 CBSE point of view, true and false question will be based out of this. If you're aiming for a centum aiming for a centum, you cannot miss these 3 classes full of theory. And foundation people, this is important from the true and false perspective. So please concentrate, do not miss it out. Next, company normally has a share capital divided into units called shares, the owners of which is known as members or shareholders of the company. Okay. Have you come across the term shares, share trading? What is meant by shares? Or subscribing, becoming owner. Capital. Okay. Share means what? In normal English local language, what does mean share? If I have a cake, I give it a part of to you. I'm sharing my cake with you. Sharing is caring. Tell no. What is sharing? Sharing means what? If I have a cake, my birthday cake, if I give all of to you, it is called as sharing of cake. Punjida. Tell no. Shanku, tell no. Feeling hungry. Oh my God. You order no. You have phone with you. You have the Swiggy with you. Order no for entire class. Now, here, what do we mean by the term shares? Please tell me. Shares means sharing the capital. Shares means sharing the profit. So share of capital and share of profit is termed as shares. To be more precise, share of capital is referred to here as shares. Got it? Not got it? Now, those who have not got it, no problem. A, B, C, D. 4 partners in partnership business. 4 partners in partnership business. They have contributed a capital of 2 lakh, 3 lakh, 1 lakh. How much is total? 6 lakhs, 4 lakhs. Any problem now? Okay. This is called as capital contribution. This is called as capital contribution. My simple question to all of you. Okay, before that, can you tell me what is the percentage of share? This is share capital. I mean, capital, partners capital. This is called as partners capital. Can you tell me what is the percentage of capital? Total is 10 lakh. Total is 10 lakh. So if you want to know how much percentage of capital A has contributed, how will you calculate? 2 lakh A is contributed out of 10 lakh. So in percentage, how much? 20%. So whatever is the total capital, whatever is the total capital of the organization, which is contributed by the partner, a part of it which is contributed by the partner is called as partners proportionate capital. Partners proportionate capital. So like that, 20% of the capital is contributed by A, 30% by B, 10% by C, 40% by D. Any problem? So total capital contribution is 100%. Got it? Not got it? So this capital, if I've shared between multiple owners in companies, we call this as share capital. The capital which is shared among multiple owners, it is called as share capital. Okay, not okay. In companies, the capital which is shared among multiple owners, it is called as shares capital. It is called as share capital. Share capital. Okay, not okay. So this 10 lakh is the total capital of the company. Imagine ABCD are owners of the company. So this 10 lakh is the total share capital of the company. A part of that which is given to the individual owners is called as share capital. A capital which is shared between owners is called as shared capital. Got it? Not got it? Now, what is meant by shares? What is meant by shares? The capital is divided into smaller units. He's telling, so the capital, which is 2 lakh, if I divide this into smaller units, it is called as shares. My question goes to all of you. Why the hell is there a requirement to distribute or divide this capital into smaller parts called as shares? What is the need or what is the necessity for you to break down this capital into smaller parts called as shares? What is the requirement? What is the need? Is my question to all of you. Now that you've done this topic already in school, you must be pro on it. To increase capital. How? Donkey fellow. Online people, tell no. Is my question valid or not? Do you divide in the partnership business? Do you divide the number of shares capital into smaller parts called as shares there? We don't do that. Have you come across the term shares anywhere in the partnership business? No. So what he's telling is that, so the share capital of the owner, if it is divided into smaller parts or smaller units, it is called as shares. My question is, what is the need and necessity? What is the need and necessity to divide the share capital into smaller parts called as shares? Sorry? To get more owners. Like this, you'll not get more owners? How many owners you need to tell get? Tell no. Think, scratch. Why the capital is divided into smaller units called as shares? Can I tell? Yes. Okay, point taken, but not to the main point. Still, you are very nearby. So what he's telling is, I'll take the point. He's telling that, so if you have the share capital, instead of capital, you can have it number of share, means even a smaller part of it can be purchased by somebody. Okay, I'll elaborate what he's saying. Now listen to very carefully. In my above example, what is the total share capital? What is the total capital? 10 lakh rupees. Got it, not got it? So in partnership business, we call this as partners capital, total partners capital. In the company, we call this as total share capital, total of the share capital. The capital is shared by multiple people. If I total it, it becomes total share capital. Any problem? In partnership business, we don't divide this capital into smaller units. But in companies, we divide this capital into smaller units called as shares. How do we divide it? Very simple. I'm going to make this capital now as a product. What am I going to make this as? Product. For example, in market, I want to buy 1 lakh chocolates. Cost per chocolate is how much? 10 rupees is cost per chocolate. Total, how much money should I pay to buy all the chocolates? 10 lakh rupees. If I pay 10 lakh rupees total money, I will get 1 lakh chocolate of 10 rupee each. Got it? Not got it? This is for chocolate. This is for chocolate. Now, what they did is same logic they applied for capital. So they said that this total capital, I'll bifurcate into two parts. One is number of shares multiplied by face value. I will get total share capital. So this 10 lakh worth of capital is there, no? They made this as a product. They made it a goods. Now, you have to tell me, what is one goods ka value? If we say one goods ka value is 10 rupees, then how many number of shares will come? This is X. So X is equal to X is equal to 10 lakh divided by 10. How much it is? 1 lakh. So how many number of shares are there? 1 lakh number of shares. Got it? Not got it? If you say, no, sir, I want the face value to be only 1 rupee. I want the face value to be 1 rupee. Now tell me, people, how much is the number of shares? 10 lakh divided by 1. How many shares? We'll have 10 lakh shares. Some company will say, no, I want the face value to be 100. What is face value? I have not explained it. I'll explain when the right time comes. Face value is 100 rupees means, now tell me, what is the number of shares? 10,000 shares. Got it? Not got it? The process of reducing the capital to a smaller units is called as shares. What are the shares? The total share capital of the company, which is reduced into smaller parts, smaller units, are called as shares. Normally, the company who's having the share capital, they divide the share capital into smaller units called as shares. So what is the shares? Share is nothing but the share capital of the organization divided into small units are called as shares. How do they divide? So 10 lakh divided by the face value, you will get the number of shares, which means they have treated the capital as product. Now the question that comes is, why have they done this? This is not done in the partnership business. This is not done in the sole proprietorship business. This is not done in LLP also. Why have they done this? One, what he said point is correct. To that, I'm going to add one more point also. Now listen to very carefully. Face value is 1 rupee. How many shares? 10 lakh shares. Now, I have a company, people. I'm going to start a company. I'm telling all of you, if you want, you can invest in my company. If you want, you can invest in my company. Tell me, people, from all of you, if I ask you to pay 1 lakh, 1 lakh, 1 lakh, 1 lakh, will you pay? Everybody's financial conditions are different. Everybody's capacity to invest is different. Somebody will invest 1 lakh a month in the share market. Somebody will invest 1 crore a month in the share market. Somebody will invest 50 crore rupees a month in the share market. Somebody will invest 5,000 rupees a month in the share market, which means everybody's financial capacity for investment is different. Yes or no? Okay. Now, some person says, I want to invest 5,000 rupees only in one company. I want to invest only 5,000 rupees in one company. Now, in the company, it is easy. So, how do I invest 5,000 rupees? I have to buy 5,000 shares of 1 rupee each. How much it is? 5,000 rupees. If one is confusing, I'll make it 10, no problem. So, how many shares totally? How many shares in total? 1 lakh shares. In my company, how many shares are there? 1 lakh share. If you want to buy one share of my company, how much should you pay for one share? 10 rupees. So now, Supreet says that, sir, I want to buy 5,000 shares of your company. How many shares? 5,000 shares. What is per share value? 10 rupee. So one share is 10 rupee means, one share is 10 rupee means, for 5,000 shares, how much Supreet has to pay? 5,000 into 10. Into 10. How much he has to pay? He has to pay me 50,000. Okay, not okay. Now, anybody else who wants to invest? Whose name? Prem. Prem says, sir, 5,000 illa, sir. 10,000 shares I want from your company. 20,000 shares I want to buy in your company. Per share ka value 10 rupee. How much it is? 1 lakh. Somebody will say, sir, I want to buy only 5 shares of your company. 5 shares means, how much is one share ka price? 10. How much should you invest? 50 rupees. Which means what? If any person wants to be a owner of my company, he can become the owner of the company with 50 rupees investment. And if somebody wants to become an owner of my company, even with 1 lakh rupees, he can become owner. Got it, not got it. Which means I can make somebody the owner with smallest of the smallest contribution to capital. Is this possible in the partnership business? In partnership business, can you make people, anybody, any Tom, Dick and Harry as the owner? If you want to admit somebody as a partner, what is the procedure for admission? You've studied cancellation of old deed, creation of new partnership deed, calculation of the sacrificing gaining ratio, new profit sharing ratio, transfer of reserves, revaluation. Every month, if a new partner is coming inside the business, how much complications, how many times you have to cancel the old agreement and create a new agreement? Got it, not got it. We wanted to avoid all that. Hence, this concept of shares was created. So here what happens is that even a person with this limited capital in his pocket, he can still be the owner of the company. Got it, not got it. All of you know BPCL? Bumpera. Bumpy lava. Bharat Petroleum Corporation Limited, BPCL, Bharat Petrol Bunk. Donkey people. Bharat Petroleum. All of you know, I am the shareholder of that company. I am the owner of that company. Yes. These people are clapping hands for me. I'm a donkey fellow. After the class gets over, if I go and put petrol, if I show him I have BPCL ka share, I'm the owner. He'll put petrol on my mouth. He'll give BPL on my bum. I am owner. I am owner on paper. I'm owner on paper. He does not understand all of that. But I am truly owner of that organization. Got it, not got it. You know what is my investment in BPCL? Only 20,000 rupees. Only. That's all. The price is somewhere around 350 rupees or 360 rupees per share as of now. You can divide. Ma'am is the owner actually. I'm so sorry. People are clapping for this also. Actually, I'm not the owner. Anita ma'am is the owner. She's got the shares, by the way. Now, if you also want to become the owner of BPCL, can you become? Yes. You just have to buy one share. 360 rupees is the market price. If you want, you can Google and check. It is 360 rupees. That's all. If you buy one share, you're the owner of the company. You're the capital contributor of the company. Yes or no? In the money facility, like this facility, is it available for the partnership business? No. To even make people like us proud owner of big organization, this concept of shares was introduced. Got it? Not got it? So one advantage of having shares is that a person with limited investment of money also can become the owner of the company. That was the first motive behind making the concept or bringing the concept of shares into picture. Clear? First point. Second point. Now imagine Prem has purchased 10,000 shares of my company at 10 rupee per share. How much has he invested? 1 lakh. Now after 5 years, this 10 rupee worth of share is now become 50 rupees. It became 50 rupees. How, sir? 5 years I did business, boss. 5 years ka profit put together how much? 4 lakh. Profit belongs to whom? Owners. Who takes profit at the end? Owners. So Prem has invested 1 lakh rupees plus his corresponding profit. His profit is how much? 4 lakh rupees. How much is the profit totally? Put together 5 lakh. So what is the, how much money did Prem invest? 1 lakh. That 1 lakh money what he invested today has become 5 lakh rupees. So what is the worth per share? Tell me people. Now what is the worth per share? He has got 10,000 shares. Am I right? He has got 10,000 shares. Today's value of that share in total is 5 lakh. What is value per share? 50 rupees. Means 10 rupee worth of share is increased to 50 rupees. Now, if Prem no longer wants to continue in my business, he can sell that share. He can sell a part of his capital to somebody else. Got it? Not got it? Now, who wants to buy the share, people? Who wants to buy the share? Prem wants to sell all his 10,000 shares for 50 rupees. Who wants to buy it? Who wants to buy it? You don't want to buy? Apply? Angriya? Yoshiko apply? Harsh says that this I will buy, sir. Do you think Harsh is donkey fellow to buy this? He is seeing what Prem is not seeing. Prem is seeing that beyond this company will not grow. But what Harsh is thinking, from here, this 50 rupees worth of share will become 200 rupees per share. With that motivation, he's like, Prem, come on, give me all your shares. Now Harsh is buying 10,000 shares at 50. So how much did Harsh invest? 5 lakh rupees. In that 1 lakh is towards his capital repayment and 4 lakh is towards the profit that Prem has enjoyed during his tenure. 4 lakh rupees profit belongs to whom? Prem. So that 4 lakh of profit is given to Prem. Got it? Not got it? So after this, if the share price becomes 60, 70, 80, 90, that is a profit of Harsh. Got it? Not got it? This kind of facility to transfer the ownership, was it available in the partnership business? Hell no. Was it available? No. Imagine Prem is going out of the business. Harsh is coming inside the business. Don't you think that Prem going out is retirement? Harsh coming inside is admission. You know, in retirement, admission, what are we supposed to do? Cancel the old deed, create new deed. Plus on that, you have to do revaluation, transfer of reserves every single time. How much painful process? So in partnership business, can we do that smoothly? Can we do all of this smoothly? No. In companies, lakhs and lakhs of people, crores and crores of people buy shares, sell share. You take any company in the share market, today one company ka share they'll buy, 10 lakh shares they'll buy, and somebody else would have sold it, no? Every day buy sell will happen. Every day admission retirement. Today if I'm buying the share of any company, I'm admitted as a new partner. So every day admission retirement. Every day admission retirement. So what should Mukesh Ambani do? Forget business. Go admission, cancel old deed, create new deed. I created new agreement. Next second, one more partner came in. Again, one more deed. You are able to understand my pain. In partnership business, it is very difficult to do admission retirement in partnership business. But this process is made very smooth in the company. So here you can admit as owner in 1 second and you can retire the next second. And everything will happen with the click of a button. With the click of a button, I can buy shares, I can sell shares. Click of a button, I buy share, I become owner of the company. If I sell share, I'm no longer the owner of the company. Click of a button. Only one button buy, one button sell. So this had given an opportunity for the people to make money. Purida. Now Prem has invested 10 rupee per share. Within 5 years, it became 50 rupees. So how much profit he made per share? 40 rupees profit he made per share. So this is another opportunity created by the government for you to earn money. Got it? Not got it? Can you buy the capital and sell the capital in partnership business? No. So this, they made one of the source of income for the general public. Got it? Not got it? So that is the advantage. So many what I discussed right now is the advantage of being a company. Purjida, all this information, did you know? Hell no. Hell no. Did you know all of that? No. Now, are you clear what is the meaning of share capital? When the total capital, of the organization contributed by multiple owners put together, we call this as total share capital. Clear, not clear? The total capital of the organization is called as total share capital. Why we call this a share capital? Because this capital is not to be contributed by one person. This will be shared among multiple owners. Not one, not two, not 10, not 15. It could be any numbers. Depending on what type of company you are, you can share the capital between n number of people. Got it? Not got it? And to facilitate the buying and selling of shares easily, to facilitate the contribution of capital and withdrawal of capital easily, they divided this share capital into smaller unit called as shares. I want to contribute capital as I want. I want to withdraw the capital when I want. To give that comfortability, the company law has divided the capital into smaller units called as shares, so that we can buy and sell shares very easily in the share market. Got it? Not got it? And all the people who are investing the money in the company are called as shareholders. If I contribute in the capital, of the organization, I'm called as shareholder. I'm contributing the share capital. The capital which is shared is called as share capital. In that, if I own some capital, I'm called as a shareholder, also called as a member, also called as a owner. Got it? Not got it? So member, shareholder, owner, all means same. You will not use the word partners here. The two keywords that you use is either member or shareholder. Both of them typically are owners. So what is shares? A share is a unit of ownership in a company. It represents a small part of the company's capital and given to the holder certain rights. Now listen to this. This is the entire share capital of the company. Prida, if I want this much shares in a company, for this much part alone, if I pay the money, I become the owner of this much part. Got it? Not got it? Who is he? Member, investor, who provides the money to the company by buying shares. So what is this? The company issues the share in exchange of the money received. So imagine this entire piece, the company ka entire share capital is worth 10 lakh rupees. How much is this person paying, you know? He's paying 3 lakh rupees. This part ka paisa is how much? 3 lakh rupees. Got it? Not got it? Tell no. So this entire circle is called as share capital. In that he's taking only one part, 3 lakhs, which is called as share. The total share capital, what percentage of holding is got, that is called as shares. This one piece represents one share, not one share. It represents the total number of capital that he is contributed towards. And by getting this piece of ownership, he's got this piece with him, no? With that, what is he getting? What is the actual benefit that he's getting? He's getting right to dividend. You know what is dividend? The share of profit in the partnership business is called, no? You know share of profit? Hell no. All of you know what is share of profit? What is share of profit? Net divisible profit. Net distributable profit. This here we call it as dividend. So dividend is nothing but share of profit. A slight difference is there, but broader level, dividend means nothing but profit. So if I become an owner of the company, if I'm owner to the company to the extent of 30%, 30% of the profit belongs to me. Got it? Not got it? Okay. Not just that, even I have voting rights. So in the company, some decision making will be done. For that decision making, the company will ask your opinion. So you can give a voting to the extent of 30%. Got it? Not got it? Next, you are having ownership in the company. How much ownership? To the extent of your contribution. You have contributed how much? 30% of the total capital. So you are owner to the extent of 30% of the company. Got it? Not got it? Hell no. Share capital is the total amount of money is raised by the company from issuing shares. It forms the base of the company's funds and used for the business growth and operation. Who are the shareholder? Shareholders are the people or institutions who own the share in the company, who own the part of capital in the company. They are the real owners and have the right to receive dividend. They can make decisions. They can share companies' profit. So all these people are called as shareholders. All these people are called as shareholders. Got it? Not got it? And this document is called as a share certificate. What is it called as? Share certificate. This in today's scenario is not much applicable. Today, all the share certificate is given in digital format. So if I buy any shares of any company today, I will not receive this certificate. This was an older norm in case of public company. Today, this concept is not existing. Anna, if you're having a private companies still today issue share certificate. So imagine Kalpavriksha Academy is coming out with, let's say, distributing of shares to all of you. As of now, I, Anita, ma'am are the owners. If I want to make you one of the owner, I'll give my shares to you. In that, I'll give you one document called as share certificate in which your name will be mentioned. So I will tell you, you are my owner of the company. You are one of the owner of the company. So in this, all the details will be mentioned very clearly. What is it called as? Share certificate. It is called as share certificate. So who is the holder of this? The holder ka name will be there. How many shares you are buying? What is the per value of the share? Everything is clearly mentioned. So who is the name owner ka name here? Devikanandan Tibrewala is the shareholder. How many shares she has purchased? 500 shares she has purchased. And what is the share numbers? Distinctive number is being given. Got it? Not got it? It's a separate identification number like Aadhaar. If you're buying 10 share means you get 10 numbers to it. Each share is one number. If I'm buying 10 shares means 10 distinctive number is allocated to me. Each share, one number. Got it? Not got it? Each share ஒரு number இருக்கும்பா. உனக்கு ஒரு ஆதார் இருக்கா? So each one has got one Aadhaar number. Like that, for each share, there is one distinctive identification number. If I'm buying one share means this share ka identification number is what? That is distinctive number. Got it? Not got it? So, are we clear with the term share capital, shares, shareholders? Tell me please. Can I continue? Okay. Incorporation, separate legal entity, artificial person, over. Next is perpetual existence. Tell me people, in partnership business, the three partners A, B, C. C died. And moreover, in the partnership deed, in the death clause, they have not mentioned about the continuity of the business. In the death clause, they have not mentioned about the continuity of the business upon death. What will be happening upon C's death? What happened to the firm upon C's death?
The partnership will not function. Your new partnership.
Donkey fellow. Very good. The firm will dissolve. Yes or no? This point I discussed with you in two places. I want all the online people to switch on the videos, or else I'll put you in the waiting room. Upon the death of the partner, the firm will dissolve. You cannot continue the business. However, if you want to continue the business, what are you supposed to do? In the partnership deed, where in the partnership deed, in the death of a partner clause, you have to mention that upon death of any partner, either A or B or C, the business will continue. Like that, you have to mention one line. Then only the business can continue upon the death of the partner. Got it? Not got it? My simple question to all of you. Generally, when these people form the partnership business, are they so educated or are they aware of all the small points? You were aware about it because you're doing the company accounts. You did partnership law. You're doing studies of commerce. You are aware about it. Imagine a science student is wanting to do some partnership business. Do you think that he will be knowing about all these clauses? No. In that case, if he forgets to put a clause, your partnership business will come to an end. Is it not a problem? Such a huge business, in one day if it collapses, does it make sense? No. So the company law understood the problem that not all people is aware about this clause. So what did company say, Law itself made it default that whether the owner is coming in or going out, or whether the owner is dying, whether the owner has become mad, whether the owner has become bankrupt, doesn't matter. Still the company will continue. The company will continue even upon the death of the owner. If Mukesh Ambani dies, Aptina, do you think the company will close down? No. His company will still continue. This is called as perpetual existence. This is called as perpetual succession. What is it called as? Perpetual existence, or called as perpetual succession. So this is inbuilt feature of a company. நீ வந்து பார்ட்னர்ஷிப் அக்ரிமெண்ட்ல in your partnership agreement separately upon the death of the owner the business will continue need not mention. Law has told that whether the person is dying, leaving the organization, going, whatever happens, the company will continue. Like that, who's saying? Law is saying by default. This is called as perpetual existence or perpetual succession. Please make a note. SUCCESSION. Very important term. Succession. What is this point trying to say? A company by default has a perpetual, oh, here it is itself they've given perpetual succession. That is, its existence is not affected. A company's existence is not affected by death of the owner, death of the shareholder, or by lunacy of the shareholder. What is meant by lunacy? What is lunacy? Mental. Patya. Basically, mantle. Correct. Lunatic person means a person who is mentally retarded. Got it, not got it. There is lunacy. So if any owner becomes mental, lunatic, still the company will continue properly. Or even if the owner or the member or the shareholder becomes bankrupt, still the company will continue. Which means there's one dialogue we say in CA. Members may come and go, but the company will go on forever. Members may come, members may go, but the company will go on forever. Today I am the owner of BPCL. Tomorrow I will not be the owner of BPCL. I may come, I may go, but the BPCL company will go on forever. So the life of the company is not affected by the members of the organization. Got it, not got it. Whereas in partnership business, if one member also dies, apdina, business has to be closed. So the life of the member affects the continuity of the partnership business. But here in the companies, the life of the member does not affect the company, does not affect the functioning of the company. Got it, not got it. Life of a company comes to an end only by winding up the company through a process of law. So if you want to close the business, there are some step-by-step procedure mentioned. Only by following step-by-step procedure, you can close the company. Just like that, company cannot be closed. Like how we said very conveniently in the partnership business, if one partner dies, business closed, game over. Here, that game is not there. If you want to close the business, there are some procedures you have to follow. Who will do that procedure for you? The CA or a company secretary will help you to close the business. Got it, not got it. For that also, they will charge. Creating company also, they will charge. Closing company also, they will charge. For maintaining company also, they will charge. Oh my God. புரிஞ்சுதா? Tell no. Tell no. Understood or understood? Oh. Next is limited liability. This point you have to wait. I'll discuss not now, when the right time comes. Next is management and ownership. Management and ownership. Reliance Industries Limited. Who's the primary owner? Who's the founder owner? We can say Dhirubhai Ambani, father, but as of now I'm telling Mukesh Ambani. Oh, wait. Okay. Apart from Mukesh Ambani, can I say there'll be other people also? Who's Mukesh Ambani? He's shareholder. Means what? Who has invested capital in the business is called as shareholder. Who is a shareholder? A shareholder is that owner who has contributed capital of the company, who has contributed towards the capital of the company. Yes or no? Plus he is the management. Any problem? Okay. In others, who will come? You, I, we come in others. Imagine all of us have one share. Mark my words. How many shares? One share in Reliance company. Today's Reliance price, one share ka price is 1,300 if I'm not wrong. Can be approximate up and down. I'm telling approximately 1,300. All of us invested 1,300. I'm having one share. You're having one share. Okay, not okay. All of us put together, how many people? 100 people. Online, offline, everybody put together. Let's suppose we are 100 people. Tomorrow, Mukesh Ambani sir is signing one contract with one company. So Mukesh Ambani sir is inviting all 100 people in flight from Coimbatore. You have to go to Bombay. In that meeting, you have to participate. Then you have to tell Mukesh Ambani sir, whether he has to sign the contract or not. Is it practical thing? Is it practical thing? We are owner, no. We are owner, no. Owner should be consulted. In Partnership Act, the fundamental says that what? It is a fundamental right that the partner should be consulted in the business matters. Yes or no? We studied something called as rights of a partner. In the rights of a partner, what is the clause? The partner should be consulted with the business matter. Here, Mukesh Ambani wants to consult with us. Tomorrow we are going in flight, Bombay. Like that, every day we'll take one decision making. Every day up and down we'll do. Where? Bombay, Coimbatore, Bombay, Coimbatore. நீ இன்வெஸ்ட் பண்ண ₹1,300 எவ்வளவு ஃபிளைட் டிக்கெட்? You invested maybe ₹1,300. Flight ticket alone up and down will come for 4,000, 5,000. And you want to be consulted for that one share. I gave example of 100 people. Go and check in the company's website how many shareholders are there. 10 lakh shareholders. Are you trying to say that Mukesh Ambani sir should consult 10 lakh people before taking a decision? Hell no. One person says, today I'm not available. I'll tell tomorrow. It happens when you call your friends for movie. Today not available. Tough you call, not available. Tough feeling. It happens with us also not. We're a group of 20 people. We're a group of 10 people. In that also, all friends don't come. Macha, today I'm not available, Macha. Not well, Macha. 10 lakh people. How many excuses can come up? Is it possible to run business like this? So, law said, in company, you have to segregate the owners separately and management separately. You cannot make all the owner management. You cannot make all the owners management. So all these owners will elect one person called as managing director or the director who will run the company on behalf of all the owners. So you have to allocate one person. You have to choose, elect one person who can take the decision on all of us behalf. Got it? Not got it? Open your mouth and tell no. A company cannot be managed by all the owners. Practically not possible. Because this will cause a lot of delay. Decisions making will not happen on time. Therefore, all this owner will elect representative called as directors who will manage the company, who will take the decision making for the company on behalf of all the other owners. Got it? Not got it? So those elected people, directors, are called as management. Thus, management ownership are separate. So every owner is not a management, but every management will become a owner. Who's management? Mukesh Ambani. Is Mukesh Ambani the owner? Yes. So every management can be owner. Which management I'm talking about? I'm talking about the key management, top management. All the top management will have the shares. Purida. So every management can be owner, but every owner cannot be management. I'm the owner. Can I be management? Not possible. Got it. Not got it. Can I continue? Common seal. Common seal. The seal which is very common is called as common seal, sir. Tell no. Tell no. What is common seal? Online people say no. What is common seal? Huh? What? Signature of the company. Very good. Others. This is how a common seal looks like. It's like one machine. You will not get any ink on this. This is not a seal with ink. It's a seal which, leaves its impression on a piece of paper. It gets embossed on a piece of paper like this. Can you see that? Do you think that is ink? Do you think that is ink? No. Is that ink? No. Basically, on that common seal, the front part is this front part. There is one die which is having company's name in it. So that if I very tightly press on a piece of paper, an impression of that writing appears on the document. Got it? Not got it? So this is basically the seal, the signature of the company. This is called as a signature of the company. This was a concept which was, pertaining to olden days. In the 1956 law, having the company seal was compulsory. But in Companies Act 2013, especially in 2015 year, they made having a common seal as an optional thing. So if let's say I have a company called as Kalpavriksha Academy Limited. If I have a company seal with me, then every document that I sign on behalf of the company, I have to fix on that company seal. So company seal is basically the signature of the company. It's a signature of the company. Got it? Not got it? But having a company seal is not a compulsory thing after 2015. It is an option to you. If you want to have, you can have it, or else no need. Got it? Not got it? Imagine I'm a private limited company. I'm a private limited company. Now Prem wants to invest in my company. So I took from Prem 10 lakh rupees. So I'm giving him share certificate. In the share certificate, I will put a company seal. I will emboss the company seal and give it. Got it? Not got it? So having a company seal is an option, not a compulsion. It represents the signature of the company. It represents the sign of a company. If you have a common seal, then on every document that you sign as a company, on that common seal should be there. Today, the trend is slightly changed. So people have stopped investing in common seal. They started investing in ink seal. Got it? Not got it? So in my company, the financial statement, if I sign, no, I'll put the seal of my company, which is ink seal. I don't use common seal. Got it? Not got it? But common seal ka concept was existing in the past, but now it is not compulsory. A company may or may not have a common seal. If it has got a common seal, then it has to affix that common seal to the all important documents of the company. On all the documents with the company signing, companies entering contract with everybody on the document, the common seal has to be affixed it, provided you have it. If you don't have it, no problem. But today, people have replaced the common seal with the ink seal. Ink seal. So if you have an ink seal, you have to put the ink seal on every document that you sign. Clear or not clear? Okay. This paragraph I'll not discuss right now. I have to complete a couple of more theory. Then if I come back to this, it'll make sense. So the next topic that I'm supposed to take is type of company. Actually, today I had the agenda to complete even OPC, but somehow we got it delayed. So my next two classes, my pace of the class is going to be a little bit faster. So my suggestion is if you can come, to the class little bit aware of all this topic, we can do little bit faster. Right? Don't come blank. You can do a brush up of, let's say, what is OPC, what is private company, something you guess about it and come study about it and come. So the next class, my sense is if we can pace up, it'll be nice. So next two classes, I should be done with the theory. And the fourth class onwards, we should start with the practical questions, right? So guys, let's wind up. That's all from my side for this session. I will see you all tomorrow evening, 6:45 p.m. sharp. Until then, bye-bye. See you. Take care. Thank you so much.